You're supposed to put the first 500 in the safe and lose the combination.
What is up, guys? It's your boy Kev. Welcome back to yet another video. If you are tuning in for the first time, please do make sure that you leave a like and subscribe, because I drop regular content illustrating different strategies, simple tips and tricks on how to improve your trading. In this specific video, I'm going to be showing you guys how to read candlesticks like a pro, and hopefully this will actually help you guys how to improve on your entries and how to avoid unnecessary trades. So what we have right here are two sets of candles. We have a bearish candle and a bullish candle. We also have a bullish candle and a bearish candle, and you might be asking yourself why we have these specific sets of candles. The reason why you want to learn these types of candles is because they will help you in knowing when to actually enter the market, especially when you're looking at a higher time frame like your weekly chart or your monthly chart. These are the candles that you have to be familiar with, because they will help you immensely when looking for trading setups or opportunities within the market. Now, the general idea behind trading is that you want to buy when price is as low as possible, and you also want to sell when price is as high as possible. The reason why you don't want to buy when the market is high is because the market might reverse and take you out before it continues pushing to the upside, and the reason why you don't want to sell when the market is low is that there are high chances that the market would actually reverse to give a corrective move before it pushes all the way to the downside, taking you out of the trade. So these are the candles that you have to be familiar with when you want to buy. So in a buy market, you want to be familiar with these types of candles, and in a selling market, these are the candles that you have to be familiar with. An example that I can actually show you guys is when we have a downtrend, when the market is actually moving in a downtrend like this, and all of a sudden you see that price is actually breaking structure and giving you higher highs and higher lows. You want to avoid buying when price is actually high. This whole move right here represents a bullish candle, meaning that price actually pushed all the way up and closed very high. So you do not want to buy when the market is like this, because what's going to happen after a bullish candle like this is that the market is actually going to push lower and start pushing all the way up. So when you buy right here, the market is actually going to take you out before it starts pushing to the upside. It is for this reason that you actually want to look for bearish setups or bearish candles, because they represent low prices, and that's when you're actually going to take them to push with the market to the upside. In a selling market, you want to look for the opposite. So if price is actually pushing to the upside like this, making higher highs and higher lows, and all of a sudden you see that the market is pushing to the downside, you want to avoid selling when the market is actually low like this, because what's going to happen is that price will push up to retest its resistance before it starts pushing all the way to the downside. So you want to avoid this move. This move right here would actually represent a bearish candle. So this would be a bearish candle, and it is for this reason that you want to avoid a bearish candle in a selling market, because after a bearish candle we have a bullish candle, and that's when the market will start pushing to the downside. So instead of looking at these bearish candles, you want to look for either a bullish candle or a candle that represents high price. So say you're looking at a weekly chart, when the market is actually pushing to the downside, you want to look for a big green candle that represents high price, because that specific candle actually tells you that the market is ready to continue pushing to the downside. Now, when you have a candle like this, this candle tells us that price actually opened right here, it pushed all the way to the downside, it went up and came back and closed right here. This is actually a high price, and we can actually take this as an entry signal for us to continue pushing to the downside. I know that it doesn't make sense right now, but when we hop onto the real chart, that's when you guys are actually going to understand what I am trying to illustrate right here. So when we hop onto a real chart, I immediately see what I wanted to actually show you guys. This candle right here is a bullish candle, but it gives us a very strong or a very long wick, which represents that price is actually low. Remember, we are in an uptrend. We can clearly see that the market is actually pushing to the upside. Price actually broke this trend line right here, and we had this huge break. Remember, I said that you want to avoid these big impulsive moves, because after an impulsive move, the market usually goes down before it continues pushing to the upside. What you rather want to do is you want to look for these candles, either a bearish candle or a candle that tells you that price is actually low. What this candle is telling us right here is that price actually opened right here, it pushed all the way to the upside, and it came back down, and it's now ready for a buy. In a context of a buying market, this is a perfect corrective move for us to actually start pushing with the market to the upside. and buy with the market. So in an uptrend, you want to look for candles that look like this. You want to look for a candle that actually went all the way to the upside, came back down, closed, and it actually represents low price, and that's when we would actually start taking our buys to push with the market to the upside. When we go further, we can clearly see that when I draw a line like this, or when I actually do this, price was pushing up. It made an impulsive move, a corrective move. It pushed up again, and it gave us our bearish candle. Remember, I said that in a buying market, you want to look for bearish candles because bearish candles represent corrective moves. What actually happened right here is that price was pushing all the way to the upside. It made an impulsive move, a corrective move, an impulsive move. And what happened right here, we can clearly see that we had a bearish candle that actually closed to the lower side. And what we know about low prices is that they are perfect for us to actually continue with the market to the upside and actually buy with the market to push all the way to the upside. Now, when we go even further, we can clearly see that the market pushed all the way up. It gave us this huge impulsive move. Remember, I said you want to avoid these candles. And I want to show you guys why I say that in a buying market, you want to avoid big bullish candles. What actually happened after this big bullish candle is that the market went all the way to the downside. So if you actually took a buy after this candle right here, you would have noted that the market actually went to your stop loss. It took you out before it started pushing all the way to the upside. What you rather want to do is you want the market to give you bearish candles because bearish candles represent low prices. So as soon as the market actually went all the way to the downside, give us a bearish candle that actually closed on the lower side. And that's when you would actually start preparing your buys, but you do not buy blindly just for the sake that you see a bearish candle. This is going to add into your confluence with other things, other indications that the market is actually pushing to the upside, like your break of structure or your touch of your trend line. And when you actually see a bearish candle that closes to the lower side, that's when you would actually start preparing your buys to push to the upside, because what the market is essentially telling you is that it is pushing to the upside, give you an impulsive move, a corrective move, an impulsive move, a corrective move, an impulsive move, a corrective move, and you are now in a corrective phase, and that's when you would actually take your buys to push all the way to the upside. So at this specific section, when we hop onto a smaller time frame like our 4-hour chart, that's when you're actually going to note that that whole bearish candle was this move right here, and a bearish candle is actually a corrective move for us to actually start buying with the market to the upside. So after our big bearish move that went all the way to the downside, that's when we would actually start preparing our buys to push with the market all the way to the upside. I want to show you guys examples of a selling market and those specific two candles that you want to look for when you're trying to sell with the market to the downside. So what we're actually seeing right here is that a price was pushing to the downside. We're back on a weekly chart. You can clearly see that price was actually in a downtrend, and remember, in a downtrend we want price to be high, meaning that we want bullish candles that close on the upper side, or a bearish candle that is actually showing some kind of exhaustion before we can push with the market to the downside. And a good example of what I was actually showing you guys is this candle right here. You can clearly see that the market was making lower lows and lower highs, lower lows and lower highs, and all of a sudden we had this beautiful bullish candle right here. Now this bullish candle represented that price was actually high. Remember, in a selling market we want price to actually be high, so price was actually high enough for us to start selling. In the context of a selling market, when you see a strong bullish candle, that's when you would actually start preparing yourselves to push with the market to the downside, because what the market is actually telling you is that it's making lower lows and lower highs, lower lows, lower highs, lower lows, lower highs, and all of a sudden you have this beautiful bullish candle that actually closed on the upper side, and that's when you would actually start preparing yourselves to push with the market to the downside. So in this specific instance, you would actually start taking yourselves right here, because the market closed on the upper side, telling you that price is high enough for you to start selling. And that's exactly what happened when the market actually came to this trend line right here. That's when it started pushing all the way to the downside, and this would have been a beautiful sell to push with the market to the downside, because price was actually high enough for you to sell. And now conversely, we can clearly see that when we had this bearish candle right here, if you took a sell just by seeing a bearish candle, what could have happened is that price could have hit your stop loss, because usually after a strong bearish move, the market actually has to come back for a corrective move or an exhaustion before it actually continues in your direction. So if you actually took a sell right here, the market would have actually taken you out before moving in your direction. So you want to actually wait for those strong bullish candles before you push with the market. Just because price is selling doesn't mean that you should just take sells blindly by looking at your bearish candle. Bearish candles don't necessarily mean that price is pushing strongly to the downside. They're only telling you where the overall trend is going or where the bigger animal that is controlling volume is going, but it doesn't serve as an entry signal. That is why you actually want to wait for the market to give you proper corrective moves before you can actually move with it to the downside. Now when we go even further right here, you can clearly see that we have another beautiful example right here. Price is actually pushing to the downside, and we had this nice bullish candle right here, which actually told us that price was high enough for us to start selling. And after this nice bullish candle, the market actually started pushing all the way to the downside, and this would have been another beautiful sell to push with the market to the downside because price was actually high enough for us to sell. And when we hop onto the monthly chart, that's when you're actually going to see beautiful examples of what I am showing you right now. You can clearly see that right here the market was actually pushing to the downside, making lower lows and lower highs, lower lows, lower highs, and all of a sudden we had this strong push to the upside, and we had this nice bearish candle right here, which actually told us that price was low, and that's when we can actually start buying with the market. So in a buying market, when you see a bearish candle, that is actually a good indication that price is ready for a buy, because a bearish candle usually represents a corrective move. When I hop onto a daily chart, that's when you guys are actually going to see that that was actually a nice a corrective move, because we've been having an impulsive move, a correction, impulse, correction, impulse, correction, impulse. Price came back for a corrective move, and we could have actually taken this as a buy to push with the market to the upside, and that's exactly what happened. Price started pushing all the way to the upside very strongly, pushing all the way to the upside, giving us nice bullish moves to the upside. Now hopping back to the monthly chart, let me show you guys another example. As we are still in a bullish market, remember you want price to actually give you bearish candles to actually push with the market to the upside. You want to avoid bullish moves by all means, because what the market usually does after a bullish move is that it actually comes down for a corrective move. What we see right here, we can clearly see that we had a very strong bullish candle. If you actually bought right here, price would have actually taken you out before pushing in your direction. You rather want to wait for the market to give you bearish candles or candles that actually represent low price, because in a bullish market you want price to give you corrective moves to push all the way to the upside with it. Right here we have a strong bullish candle. This move right here represents that bullish candle. What you rather want to do is wait for the market to give you those bearish candles that represent low prices, so that you can push with the market to the upside. As soon as price started pushing all the way to the downside, this would have been a perfect time for you to actually start preparing those buys to push with the market to the upside. So when I actually hop on a smaller time frame to see what happened right here, let's go to a daily chart. So when we hop onto the daily chart, we can clearly see that the market was actually pushing to the upper side. It made a huge impulsive move, a corrective move, an impulsive move, a corrective move, and price actually gave us a double bottom right here. And after that nice double bottom, price just started pushing all the way to the upside, and this would have been another beautiful buy to push with the market all the way to the upside. Going on with the trend, I want us to go back to the monthly chart to show you the very last example. You can clearly see that the market was actually pushing very nicely to the upside, and we had this beautiful candle that I actually showed you guys at the beginning of the video. It is actually a bullish candle that went all the way to the upside, came back down, gave us a very long wick, representing that price actually melted all the way to the downside. What this candle is actually telling us is that price actually opened right here, it went all the way to the upside, came back to the downside, and closed right here. So in a bullish market, when price is actually closing like this, it is actually telling you that it is giving you proper corrective moves for you to actually push with the market. So in a buying market, when you see a candle that gives you a very strong wick melting to the downside, it is actually a good sign that you should prepare your buys to push with the market, together with other confluence, confirming your prediction that the market will actually push to the upside. This has been another beautiful video. If you guys actually enjoyed, please do make sure that you subscribe, like, and share the video with your friends. Peace.
You're supposed to put the first 500 in the safe and lose the combination.